Dominique Strauss-Kahn. He is the managing director of the IMF, a position he's held for nearly 4 years now. Thank you very much for being with us today, sir. First off, what is the status of the global economy?
Well, the recovery is underway, firmer than we had expected 6 or 8 months ago. Still with some concern which have risen during the last months concerning oil prices, for instance, or overheating in some emerging economies. Also some concern about sovereign debt and financial sector repair and reform in Europe. So unemployment is still high. There's no room for complacency. But the good news is that the recovery is really underway.
Today, when you take a look at the bond markets in particular, there seems to be a return of panic as it pertains to the European debt crisis. You've got Portuguese yields, Greek yields at record highs. Concern that perhaps, if not default, at least rescheduling of debt payments. Would you be supportive of rescheduling?
Well, we are working with Portugal to build a program. We have already a program, as you know, with Greece and Ireland. And this program are backing the government's position in both countries, which was no restructuring. And that's the way the program has been created. And I believe it will work.
The worry, though, was that those aid packages, particularly in the case of Ireland, added to the debt problems. That debt load is just not sustainable.
That's why a lot of effort has to be done, not only by the countries, but also by the European system itself and by the Eurozone. There's no way to solve this kind of problem without effort, and I'm still expecting from the European side a more comprehensive plan to address not only the sovereign debt problem, but also the financial sector problems, and more globally, the way they will go to boost growth in the region. But the program has been built around this idea, and it needs time to be implemented, time to produce results. I expect this will work.
Do you think that it has worked thus far? I mean, do you look at
if you look at Greece, for instance, a lot of reform have been implemented. Government has been very bold. The problem now is not to run out of steam and be able to go on. The program is a difficult program, and a lot of things still to do down the road.
Greece did get to lower their interest rate on the aid that they were receiving.
We were arguing as part of a more comprehensive action that should be one part for months, because the interest rate were too high, and so it's a good step forward.
Is it too high in Ireland?
Well, globally, I mean, the problem is, if you want to fix a problem, then the discussion shouldn't be about the fact that the debtors should pay high interest rate because they fail in managing their own economy. The question is to be pragmatic and fix the question. So certainly, the idea for Greece, we have developed this idea 1 year ago, since the beginning of the program, that something should be done on the interest rate. So that's very welcome. But it's far from being enough. You have a lot of questions down the road, maturity questions, question on the amount of money which is needed, again, questions which are not directly concerning the sovereign debt, but directly linked to this as the state of the financial sector. All this has to be addressed. And if it's correctly addressed by the Greek on one hand, the Eurozone on the other hand, then I see no reason why it would work.
You've raised concerns about the capital levels at European banks, the ability to withstand some of the pressure. If you extend the maturity of debts in Europe, in Portugal, in Greece, does that alleviate some of those concerns?
Well, again,
give them more time.
Time will be necessary. Certainly, you can't expect things to be solved very rapidly. It takes time. But I don't like this kind of approach that you're obliged to take, and I'm not blaming you, of course, at all, but which is a more piecemeal approach, saying, okay, what about this, what about that, what about this third measure? The question is to address the problem really comprehensively, and that, in my view, is what's still a little missing. I hope that this spring meetings in Washington will be the occasion for all the stakeholders to go more into this kind of approach.
Do you see something coming out of these meetings that'll change that in the immediate term?
That's the usual rule for this kind of meeting. The rule is people come into the meeting with different ideas and they go back home with the common idea. And I think it will work this time today. It's a way to enhance cooperation, and cooperation is absolutely necessary. There's obviously no local or domestic solution to the problem, the global problem we're facing.
Do you think that the debt crisis has been contained to Portugal? There was worries, obviously, about a spread to Spain and the like.
Yes, I think that what has been done by Spain is exactly what we could expect. And the market have recognized this, even if you can have short-term variation. So far...
You think the fear today is temporary?
Well, you know, markets move one way or the other way at a very high frequency.
You don't think it's warranted?
What I see in the medium term is that they have recognized the fact that what has been done by the Spanish authorities was the right thing to do. And that's very important. So we have to deal with the countries which are really at the periphery, Greece, Ireland, and since a few days, Portugal.
All of Europe is in focus right now. We've been talking about the periphery, but as to the core, to German economic strength, French economic strength. Today, Christine Lagarde, in your home country of France, lowered the economic outlook. Do you think that the stability of European growth is really there?
Well, depends on what you're talking about. If you're talking about the stability of European growth, yes, I think it's there. The problem is it's stable at a low level. And the real problem is that our forecast is a rather long period of low growth in Europe. Even in Germany, where growth is at a higher level, but not that high. So the real problem the Europeans are facing is the one you just mentioned, which is a sluggish recovery and low growth for 5, 6, 7, maybe 10 years. So that's what they have really to address in terms of boosting innovation, credit to the SMEs, and that's why repairing the financial sector is so important, because without this kind of repair, there won't be credit flows to SMEs, and without this, it won't be jobs. The real threat is recovery without job. We have been saying this in the IMF for 1 year, and I won't say it's totally without job, it would be unfair, but really we have a recovery with not enough job, and that's the problem that has to be addressed now.
You're in the 4th year of your 5-year term. Do you think France needs you right now?
Well, I think France, as other European countries, need the IMF. If that was your question.
But you as an individual, do you see yourself re-entering politics?
Nobody as an individual is needed. Let's talk about institutions, that's better.
So you don't want to talk about these rumors of you running for the presidency?
I'm the managing director of the IMF. It takes me almost 24 hours a day. I don't have time to think to something else.
Well, you've got 1 year left on that term. You must be thinking about it.
No, really, the question today in the global economy are a serious one. I think these meetings will be helpful to avoid any kind of complacency. That's the main threat, that most people will believe the crisis is behind us and there is no need for urgent action. There is need for urgent action in all parts of the world. Global imbalances when you're talking from the relationship between China and the US, overheating when you're talking about what's happening in Latin America, food and fuel prices problem in low-income countries, debt, sovereign debt problem in Europe, as you mentioned, and financial sector repair. In the US, fiscal consolidation, as just announced by President Obama. That's the real problem we need to address.
Are you supportive of what the President announced? Do you think that's enough to build US credibility?
It goes in the right direction. We have to welcome this. Of course, I have to look more into the details of the plan, but the fact that medium-term consolidation, fiscal consolidation, is needed in the US has been stressed and underlined by the IMF for a long time, and I'm very happy to see that the authorities are on the same pace.
All right, we have to leave it there. We're out of time, but I could talk to you for the next hour and still have questions for you. I appreciate your time today, sir.
Thank you. Thank you very much.